Welcome to the SPX options trading series by alphacrunching.com. Now let's get into the video. So for this trade example, we're looking at the daily chart for the week of November 14th, 2022, and I have Wednesday selected here. That means that this is Wednesday, November 16th, 2022, because the week of setting that you can choose a week refers to the Monday. So we're looking at Wednesday, November 16th, 2022. And there's a clear sort of bearishness from late morning into the afternoon for that Wednesday. Now, I like to keep the average SPX points in mind because this can kind of tell us what the average magnitude of these intervals would be. So anything that's 10 or less points, it's really just kind of choppy and it's not going to be consistent. So with the first part of the morning, we're up and down between about negative 10 up to positive 10, so about a 20-point range over the course of a couple hours. So this really isn't super tradable to me. I would rather wait for that longer and larger potential move. So we look at these time frames, which is late morning. This is around 11 to 11:45, give or take a few minutes. And we can clearly see that over the last several weeks, Wednesday has closed much lower than that late morning time frame. So what we're going to be looking to do is put on a bearish trade that lasts, for the rest of the day. So I like to do this with call credit spreads in this case. That's how I like to do this. But we know that the blueprint is telling us an average movement over the last several weeks. So we want to look at the blueprint as kind of a historical fact. There's no magic here. This is just pure math about what happened, kind of like any other indicator. But when the market actually starts trading, we want something that will help us confirm in real time if that scenario is going to play out again, because we know the market can kind of change. The future market is always going to be a little bit different. So what the blueprint is telling us is what to look for. We can avoid watching the market for the first couple hours and look to see if the market is confirming what our entry could be. Now, you can do this a couple ways. Technical analysis. I know there's a lot of technical analysis people. In this example, I'm going to show you how I'm using market net flow from Tradedics. I've posted about market net flow. This is a different product or service. I am not affiliated with them. This is just a product I use, but I wanted to show you how you can use it. I like to just have it because I think it's super interesting. And if you haven't seen the videos on this before, let me just give you a brief primer. So this is a 1-minute chart of SPY for November 16th, 2022. That's the day we're trading. The white line is a 1-minute chart of the SPY, and we can see the SPY stock price here. So it opened up at 397 something, got the 397.5. This is approximately 39.75 on SPX, and it kind of chopped around, and then we have the end of the day here. The red and green lines are the net market premiums or options premiums for all stocks in the market. And the red line is put premiums, obviously, and the green line is call premiums. So when the put premiums are going up, that means that there are a lot of puts being bought across all stocks. It's not looking at index options, it's looking at options on stocks, which comprise the index. This is why I like this indicator. So when the put premiums are rising, it's saying that there's a lot of puts being bought on various stocks. And we can see the cumulative net premiums ended up about 24 million in premiums. And then the green line is call premium. And on this particular day, the call premium was going lower. So this means that not only were puts being bought, calls were also being sold. So there's two sort of net bearish things happening here. So because the options market is net bearish and our blueprint is net bearish, then I'm willing to take that trade. And here's how I did that. And we'll look at the orders here in a second. As the market came into that 11 to 11:45 hour was in this range, I sold a call credit spread kind of on as it started to rise back up. Part of the idea was that this, you can see kind of a resistance area in this zone. And then as it rose a little bit more, I sold another one and then held on to those. So I sort of legged into this particular trade because we saw in the blueprint that it's not just this one time frame. This could be the peak. This could be the peak. So I legged into this. And then as the market kind of traded sideways, it actually retraced and went against my position. So I was sitting with some unrealized losses for a little bit, and I had to figure out if I want to hold or not. But when I look at the options flow, I know that rallies are not going to be sustained when puts are high and calls are low. So this was actually another good shorting opportunity if you were just day trading in general. And then the market ultimately turned lower, and it was around this time, which is a little bit after 2 o'clock, that I was able to book about 75% of the max profit of my credit spread. So within, let's call it 3 hours or so, I was able to book a 75% gain in my credit spreads. And I just want to note here that if we look at this time frame and we looked at the blueprint and we saw that the average movement between 1140 to the close was about 50 points. We started at positive 10 and down almost 40. So this is an average movement of a negative 50 point move. So what's important to note that when you're putting all these things together from various different price action weeks, you could have a really, really bad drop. I mean, we know that Fed announcements come out on Wednesday. It doesn't necessarily mean that we think the market's going to drop again another 50 points. We just know that the general bias is to the downside. So we still want to use our risk management and confirmation. And in this case, if you look at, let's call this time frame, which is about 39.65, which would be SPX, and the actual close was about 39.55. So the net actual close was only negative 10 points. And we saw a lot of volatility in between. We didn't get the late day sell-off that the blueprint was saying, but we actually got kind of a rally here, and we can saw call premium kind of spiked up at this level. This sort of told you that there was going to be some support coming in soon, and we can see that the market was supported. I mean, it was choppy, but supported the rest of the day. So here's what that looks like for the credit spreads. So again, the first credit spread I sold was the 39.85, 39.90. At the time of this trade, the 39.85 was about a delta 30. That's kind of what I was targeting. As it continued to rally up, I sold another one and I got a better credit. And then I was able to close those a few hours later around 217 for 35 cents. So 110 and 150 is 260. That means my net credit was about $1.30 per spread. I had a couple spreads and I was able to buy them back at 35 cents. So when you buy two of them, that costs you $70. So 260 minus 70, I was able to book about $180, $190, somewhere in there on that trade for those few hours. It was very, very choppy. I've been trading a little bit smaller, but I was able to book $180 for this trade. And again, looking at what the blueprint's doing, I was using the market net flow with some very simple technical analysis to help confirm the trade. And this is the trade details of that particular trade. So I hope it helps, and we'll see you in the next video.